Welcome to the second episode of the Series 7 podcast series. Today we're going to be discussing preferred stocks, and we're going to be building on what you learned in the first episode, which was common stocks. There's a big difference in par value in preferred stocks versus common stocks. In common stock, the par value really doesn't mean much of anything. It's an arbitrary number, and it has nothing to do on the market price of the stock. The market price of the stock in common stock is going to be determined by the market perceptions of the prospects of the company or the actual results of the company. In preferred stock, the par value is really what the value is based on. It's usually set at $25, $50, or $100 per share, and that's what the value of your stock is based on, the par value. So it's totally different than common stock. In a dissolution, the preferred stock is paid in full at its par value before the common stockholders get anything at all. And par value is really not affected by the prospects of the company, but I'm going to talk about this a little later on, and I think that's a bit of a misnomer. But according to what the questions you will be asked on the Series 7 examination, it's going to be interest rates that affect the market value of preferred stock. Well, how are preferred stocks created? You can do it right in the beginning. When you're forming a corporation, you can set up a preferred stock as a class of stock in the Articles of Incorporation. That's usually not done too often. People don't think that far ahead when forming new corporations. So the other way we do it, and we talked about this in the last episode, by a stockholder vote at the annual meeting. And you can vote either in person or by proxy at the annual meeting. Let's talk about what are the characteristics of a preferred stock. First of all, it's senior to common stock and other preferred stock issued subsequent to this issue. Many times, and particularly in utility stocks, you will see multiple classes of preferred stock, and each class has a seniority level in the corporate structure. So the Class A preferred would be the first preferred that would be paid off in a dissolution, the Class B, and so forth. But this is spelled out specifically in the prospectus of the preferred stock when it's issued. But nonetheless, all preferred stocks are senior to common stocks. And where a preferred stock stands in its seniority is really dependent on what's described in the prospectus. Preferred stock has no voting rights, and it has no preemptive rights. But before common stockholders can receive any dividends, preferred stockholders must receive their dividend. It has priority to assets in corporate dissolution. We just talked about that already. Now this is important. It's considered as equity on the balance sheet. It's not debt, it's equity. And as equity, it has a perpetual life. There is no maturity date in a preferred stock. Now we'll talk about call features later on, but just for right now, preferred stock is a perpetual stock, a perpetual investment. And preferred stock, with a couple exceptions, and we'll talk about those later on, has a fixed dividend rate. And preferred stock usually specifies a dividend percentage or a flat dollar amount that will be paid on that stock. and it has a par value that's important. When you're looking at a preferred stock, you will often read cumulative or non-cumulative in the description. This is a big difference, and you need to understand this.